Stocks finished today flat again, up and down, some little bit of noise intraday, but it does appear from a technical standpoint that we're not going to be bullish like we've been anymore. There might be a run or two to the upside, but it appears the strength of the bullish moves. And I'm going to show you why I say that, as well as some signs that we may have already started the pullback. Not necessarily in full force yet, obviously, but there are some signs that signal that we are definitely headed in that direction. Again, that doesn't mean we're going to tank. It doesn't mean we're going to fall off a cliff. It doesn't not going to happen tomorrow, but it is something we do need to be aware of happening sooner rather than later, and just be on top of that, and definitely de-risk now if you haven't already started to from a bullish standpoint. I'm going to break all that down as to why, and with our trade idea today, I'm going to show you a way that we can add some bearish deltas to our portfolio without going overboard, and on what type of stock to do that on. So let's go ahead and get started. Hoy es miércoles, el 5 de mayo del año 2021. Esto es el Market Outlook de MarketScholars.com. Me llamo David Settle. All right, well, let's start off taking a look at the market forecast on the S&P 500 like we always do. As you can see, we finished today relatively flat. By the time all was said and done, not very much of, I mean 0.00% gain or loss is about as flat as you could possibly be. You can also see too here that the short-term sentiment and the momentum lines, which had been slightly rising, were not able to get above. For most part of the day today, until this late little drop we had at the end of the day, we actually were above the chart's midpoint. But obviously that's not how we're not getting enough of it. It's a very, very small range, and that's kind of why it's still stuck there. So I mean, obviously we're not, very strongly. It's not like we're really taking off on a new near-term rally here. In fact, we've now got 1, 2, 3, 4 days with the near-term line below 50. When you're in a bullish run, this is what the near-term pullbacks look like. When you're in a near-term pullback, you get more of an extended decline, near-term declines. But when you're in bullish rallies, the near-term line comes down just briefly. Maybe this 4 days, right? Maybe this day ended up being, looks like, just barely above it. And then 1, 2, 3, 3 days there, and then boom, back above 50. And over here, that was the decline when the decline started. This one, at the very beginning, we had 1, 2, 3, and then boom, we're back above it. So now we've got 1, 2, 3, 4. So it's a little bit of a decline, and that's kind of how the weakness started over here. This was 1, 2, 3, 4 days, and then, like I said, the weakness that kind of started the volatility. Even though we got a higher highs, we were kind of done with that bullish rally without some light pink shading at least showing up there. Remember, the Nasdaq actually did have a pullback here. So it's a little bit of a little red flag to see the near-term line unable to get back above and stay above, for that matter, because it was above it for most of the day, but it wasn't able to stay above that 50% level. So that's something to consider. You also, as well, if you take a look at like the Nasdaq 100, and for that matter the Russell 2000, but more so the Nasdaq, you can see the short-term sentiment's not only staying below 50, but it's at pretty low levels. So we've 1, 2, 3, 4, 5, 6 days, and we've been oversold and extreme on the momentum line, oversold in the near-term line, and still down. So again, it kind of shows you that, and we've got the light pink shading, but we got a light pink shading and yellow line. And that's typically a bullish pattern, especially right at the 38% retracement level. I wouldn't be surprised if we got that kind of bounce to finish off. Now, maybe not up to that dramatic of a new high. It wasn't that dramatic, but not that much of a new high. But I wouldn't be surprised if we got near these highs. If not, maybe a little bit above it, but most likely a little bit below it. Maybe, briefly above this 23% line before coming back down. I think that's kind of what our next near-term rally. It might not even be a bullish one. This one did get the near-term line for a while, a good run, and above 80. Our next one might not even get it above 80 and might only spend maybe 3 to 5 days above 50. Is kind of what I would expect to see out of the Nasdaq. But a bounce off of what is a bullish pattern here, light pink shading, the yellow line, is typically a bullish pattern. The Russell 2000, of course, is as flat as a pancake, has been for multiple expiration cycles now. Its intermediate line is still up above 60, so it's great, but not getting above 80 and rolling over with short-term sentiment that's not as bad as the Nasdaq. It's not as extreme or bearish to the downside, but it's pretty low. And again, not as many days below 50. We're still only what that was above it. So this would be 1, 2, 3, 4 days like the S&P. So again, kind of suggesting that things aren't necessarily like breaking into a bearish pullback, but it also kind of shows that we're probably not bullish anymore either. Like there might be a couple, maybe a bullish near-term run or two left, but it seems like the strength of the bullishness is gone now, as we see some of these bearish signs develop here across these different market forecast charts. Even though we have light green shading the green line, I mean, look how sideways we are and that near-term decline. And what we're seeing on some of these other indicators you'll see in a minute. Like I said, it seems like we've lost the strength of the bullish run, and we might be ending the bullish run. Not dropping per se yet, but not moving up anymore either, and kind of starting to grind before the exhale occurs. Before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us that you liked our video today and that you want us to do another video again tomorrow. Quick way to give us feedback if you like our videos. Of course, if you don't like our videos, you don't even have to watch. You don't have to click on anything. You don't have to watch. But if you do like our videos and you want to let us know, we really appreciate those thumbs up. That makes a big deal for us. It helps us out quite a bit actually with how these videos are promoted. So as well as the comments. So comment on anything that stood out to you today. What questions or comments you have. What stood out to you. Why should other people watch it based on what you saw today. Those are the kind of things, again, like I said, that really help us, and we really appreciate those that do that. Also, join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free. Among other things, you get access to our Market Outlook forum with your free subscription. It's the only forum that's free. You can be able to interact with other market scholars as you watch these videos. Follow me on Twitter for more content in between the videos from day to day. There's my handle here at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, as always, we invite you to check out some of these things over here on the right-hand side, including our Market Outlook live videos. Every day I do these Market Outlooks. I also do a live video at 3:30 Eastern Time. I review all the trades I've done in other Market Outlook videos, and we put on today's trade idea before the market closes. So you'll be able to get that. Otherwise, everybody else, you're watching this at night after the market's closed, and you can't put it on until the next morning. Sometimes that can make a difference. Here's the trading room schedule we have. You can see more of our trading rooms right here when you click on view more. You can also get to our trading room schedule up there. Again, all of our paid subscribers get access to those Market Outlook live videos as well as all the trading rooms. Our premium subscribers obviously get access to, don't have to pay as much for that access, number one. On a month-to-month, on an average monthly basis, it's actually cheaper to pay for premium. And in addition to that, you get a lot more access. You get a lot more tools and content, as well as access to our specific class forums that our monthly subscribers don't. Come down here, click on this heart. It opens up a new tab. Click that like button right there. Also, click on this thumbs up icon. Opens up another new tab. And click on that like icon. Again, the more you do that, the more engagements we have. It really helps us get our content out to everybody who follows us, not just 89 people. So that really helps us out, especially the shares too. Also, it helps you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us right here. All right, so taking a look back on the chart, we'll take a look at this long-term chart again. PPO now close to finishing the week at that 9% mark. We were above 9% last week, coming down a little bit this week with a transition candle and very small Hakinyashi bodies here, right around that 162% extension of the COVID decline. Not surprising that we kind of run into some room, some resistance here. NASDAQ it got close to that 262% level, got a divergent high point here, a higher high with a much lower high in the PPO. Obviously looks like it's starting to roll over, and then the Russell 2000 has been declining ever since peaking way over here. It's been on the sideways trend for multiple weeks now, but still at 14.5%, still higher than the NASDAQ and the S&P 500. And the Nasdaq's actually pulled down to where the S&P's is now at that 8%, which is still a peak. In fact, a pretty historic peak. Not the all-time high, but pretty darn close on the S&P 500. Needless to say, very extended long-term sentiment here. And long-term sentiment doesn't have to we don't have to drop per se. We can just kind of go sideways and converge that way. So we'll kind of keep our eyes on that and see how this converge. It appears the divergence is ending. The bullish move is ending. Now we're starting a period of convergence that we've already started on the NASDAQ, and we've already started here more recently on the Russell 2000. From a 3 green arrow standpoint, sorry, I hit the wrong chart here. We do have now 2 red arrows on the MACD and the stochastics. Not quite the third yet. Significant drop in volume today. As you can see, if I were to take a look at the 1-day chart over here, you can see what the volume looked like. It was very, very minimal. Here, let me see if I can change that so you can see it this way. I don't know if it's going to let me do that. No, it's not going to let me do that. Needless to say, very, very little volume. Very little volume, as you can see throughout the day, and that played out by the time we were all said and done. Big drop there, but still no red arrow yet. And if you take a look at the 2-line versions, you can see that they're declining as well. If you take a look at how we're performing relative to the moving averages, again, we're below them. Even though they're positive, even though we're still above 60 on the stochastics, we're still well above 0 on the MACD. We've been below these moving averages for a while, at least on the MACD we have. And of course, when you look at the QQQ, we have this entire time on the stochastics too. You can see on the small, and the QQQ is dropping. You can see the Qs. We have dropped below 40 on the stochastics. We have dropped below 0 now on the MACD indicator, even though the moving averages haven't quite yet to confirm that. And then, of course, IWM still above 60, still above 0, but getting closer than the S&P. So you can kind of see the differing types of patterns. You also see here too, SPX still relatively bullish, NDX not so much, right? A lot more bearish, dropping down below -200 yesterday, and then the Russell 2000 leaning more bearish, but none of them really breaking down significantly hard. The directional movement index, we talked in my class yesterday about how when the negative indicator is below 20 and then pops back for this long and then pops back up above 20, it usually gets below these indicators at the end of these runs. And then when it pops up above 20 and the positive indicator drops below 25, that's usually a sign that the run is over with. So you can kind of get an idea of what's going on there. The ADX is still strong, but not quite there. If you take a look at IWM, of course, this happened quite a while ago where it got back above 20. And then the positive got below 25, and you can see we've been sideways ever since. And then the QQQ, we're just getting above 20 again because we had a little bit of a run here, and we've been below 25 on the positive, and now they flip course, and we have potentially a bearish directional move going on here. So you can see how things are changing. We're not quite bearish yet. We're not in the lower quartile of that bandwidth. It is a relatively low bandwidth, so it won't take much. Whereas the Qs are in their lower quartile, and IWM is getting closer to that lower quartile. Still centering around this volume though, but you can see that if it were to break the 23% line, there's not very much volume here to hold you up until we get back down to that pre-COVID high point there. That's why we've talked about it. It's got the poorer margin of safety. It's got the most to lose once we actually do get the broader exhale move. All right, now if you take a look at the intraday chart, you can see, basically we've just been noisy moves filling in gaps, right? So there's last week's range, there's the weeks before range. We traded in yesterday. We got out of last week's range, but still stayed inside of the week prior's range. Today, kind of stuck in the middle. There's a big volume node up here. That's why we have some short-term resistance. It's hard to get going too much to the upside, but we essentially filled in the rest of yesterday's gap to the downside today. And we filled in this morning's gap with the early move to the downside. So we can say that pretty much all these gaps now have all been filled in up here. over the last little bit. There's a pickup in volume at the end of the day. And you can see that if we were to break down below 412, these recent lows, which will end up being the 4-week lows here pretty soon, not a lot holding us up anymore from that level. IWM, you can see why it's kind of stopped here, because that's where its point of control is to the downside. We had been above it, and now we've kind of pulled back down to it, and that's why we're not really going any further. QQQ, on the other hand, we did form a new low point. So we got that Arun, that bearish Arun pattern where the positive jumps up above, or the negative jumps up above the positive. We saw that before over here. That started the pullback. So that's a bearish pattern, especially when you go all the way up to 100. So it essentially sets the new low point on that day, as we got yesterday, and we're still down there here today, off of yesterday's low. So we didn't get a new 100 pattern, but kind of watch to see, because that's a bearish pattern. It's the signaling the beginnings of more of a decline. This is the kind of move breaking below that midpoint. And the bearishness involved with it. You notice we did not fill in that gap. That is more of a breakaway type gap pattern there. But that's the type of move you expect to see if we were to gap below 411. That's the kind of move you would expect to see if we were to break down here below this 220 level, right? So those are kind of equivalent levels to watch for on these other indexes that would produce a type of move that we saw here on the NASDAQ yesterday. If you take a look at the volatility index, another sign that we're not really starting this pullback today is that we did, jump up in volatility, but we only got to 80%. We're at 85% now, so we're not as, after the pullback, we didn't drop all the way to 80% this time. Now let's see where the next jump in volatility is. Most likely we'll probably peak at 95% before we get another little decline. Then that's when I expect that we'll get the jump to 105 or higher, right? 105% being the intermediate pullback, 115% or more being the market sentiment pullback, which is actually what I kind of expect that we'll get. But we'll see how big it is actually when we actually get it. So to summarize our technical outlook, obviously there is some weakness. Obviously we've ended the bullish move. The question is whether we've started the bearish move, and then how dramatic will the bearish move be. Obviously, so far it's not really much of it. So far it's just noise. But you can see that it's a little bit more on the NASDAQ so far. It's been starting there, and that's where the market leadership is from a market cap weighted standpoint. But the market leadership from a performance standpoint over the last 6 months is in these smaller weighted sectors that are more correlated with the small cap index, which has a lot to lose if and when we do get a broader exhale. And that hasn't started. So we've got the inklings, we've got the red flags, but we're not really starting it yet, and I don't believe that we necessarily will before this week is over, nor even by the beginning of next week. We probably have another week and a half or so, still some more near-term rallies. But if it does occur earlier rather than later, then we'll keep our eyes peeled. We kind of know that we're starting to see the signs now of a broader exhale that we didn't get previously, that was only limited previously to the NASDAQ, and then just almost to the Russell, but didn't even touch the Dow, much less the S&P 500 to a smaller degree. So when it's more a broader exhale, then we'll get that pullback that we've been looking for over the last couple of months. And at that point, things will be more bearish from an intermediate posture, not fall off the cliff bearish. It won't be a correction. It won't be a bear market. It will just be an exhale. Every time you take a breath in and you breathe out, that doesn't mean we're dying. Every time the market drops, it doesn't mean we're tanking. It just means that we're exhaling. That's not a correction. It's just an exhale. It's just, okay, breathe in, breathe out. The market does that too. It just hasn't done that lately. And we've been taking a really deep breath in. So there might be a little deeper breath out, but that doesn't mean that we're dying or that we're sick. It just means that we're exhaling. And so it won't be that big of a deal unless you've gotten a lot too bullish over the past month, and you've taken on too much risk. Then it will feel like you're dying because you're exhaling, but it won't necessarily be the case. So what do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. What charts or indicators are you looking at that tell you why you're a lot more bullish than I am or why you're a lot more bearish than I am, and share those with our community down below. You can see the inflationary aspect going on here. Commodities just really killing it. And again, if you go back to that September 24th low when the small cap index started to make a run last year, and you take a look at what assets have been doing well, there's your small cap index. Initially, it was emerging markets, and they've kind of followed suit with commodities. This time, commodities have been going up without emerging markets, which again just suggests just how strong this inflationary trade is, with bonds especially really dropping. See, that's where bonds, this period of time, it was more of a kind of a bullish expansionary mode, but since that peak here in February, it's been inflation mode because stocks have been flat, emerging markets have been down, but bonds have been down quite a bit. The gold's been flat because the dollar's been flat, and then commodities have really taken off. So very, very inflationary type market that we have going on right now. Of course, when you look at just this week alone, we've had this little bit of a little bit of weakness over the last little bit. You take a look at what's going on here. It's been the Qs. That's where the weakness is. Interestingly enough, today real estate really dropped off the table, but commodities didn't. Those two have been kind of tied together, but they're really diverging. So real estate might be telling us a little bit about what might be happening, what eventually will be happening in this other really hot asset class. And you can see from an equity standpoint, small cap stocks down, lagging behind the S&P. The S&P is holding up better than the Qs and small cap, which is kind of rare because the Qs usually dominate the market cap of the S&P. They usually will drag the S&P below small caps when they're that far down, but that wasn't the case here. So kind of interesting development there. Also, the divergence in international equities with developed markets going up, but the emerging markets kind of slightly down and flat there. And then on the other hand, with this risk off move we're getting today or this week so far, bonds are up, gold is up. So it kind of tells you a little bit about this risk on nature and kind of confirms, this bullish move, bullish market forecast that we're getting in bonds. Not quite getting back above that 23% level yet, but we're pretty darn close. And gold, which is above its 23% level and also still on that new bullish intermediate rally. Of course, the euro US dollar has been a very big deal. We talked about that breakout there, and then the fact that we didn't hold the breakout, and then we confirmed that. We talked about we weren't too we expect a little bit of a bounce, but not that we would continue higher, just kind of a exhale type bounce. We got that, and then we're back down here today. So you can see, again, it's this breakout that occurred here that made you think, oh man, the euro's really taken off. Well, that was not confirmed, and we're actually back down now. Short-term sentiment staying bearish. We have a weak bearish posture again, but the short-term sentiment suggests that it might turn into something more than just a weak posture. We might bounce back up, but only like we saw yesterday, where we bounced back up and not to new highs, and we continue lower. This 23% retracement level is a very important level by the end of the week, early next week. We break back down below that, then it nullifies the whole breakout pattern that we had post April expiration, throws it all out the window. And like I said, now that would actually coincide with more of a broader risk off move. If I take a look at the sector rotation, that's a little bit of a different story. Look at energy, financials, materials, industrials, just really doing well. And of course, we know that they did well. They've been the biggest drivers, like I said, in terms of performance off of that September low point for the Russell 2000, especially energy and financials. And they're really making a big push over the last couple of weeks. But everything else, technology, discretionary, communication services, really all dropping off this week. So you can see how this last 3 days here, let's do intraday. You can see that the weakness that we're seeing in those particular areas, interestingly enough, also in utilities and real estate, interest rate sensitive areas. So it's not complete risk off. It's just a move back into these areas that have been doing so well. But as I mentioned, and I'll bring this back up here, I don't believe that will be very long-lived, as I think what we'll end up seeing is this rotation. So if I go back to weekly, you can see the long-term rotation here is out of energy and financials and communication services. And materials, not so much yet. Industrial still holding up. They still got some very strong momentum, not rolling back down nearly as much as those two yet. But there's communication services, there's technology, there's discretionary. They're not really doing much of anything. And utilities and staples and real estate on a long-term level are moving up to the right to some outperformance, right? But on a daily level, you can see we're getting, it looks like maybe one last rotation into financials, industrials, energy, materials, with real estate, healthcare, utilities, and staples moving down to the left. I think that's probably our last rotation to where until they start to move back up to the right and get back in sync with the longer term trends, and then push that longer term trend over that 100 mark from a relative strength standpoint. And usually when that happens, that's when we have more of a bearish, again on a long term chart, mind you, more of an intermediate type pullback that we haven't seen for a while, right? You can see utilities and real estate and staples, these three over here. Here, let's do this. These three over here, you can see they've been over there for a while since we had this pullback in September. And that pullback got utilities and staples and real estate close, but it wasn't very long. So they rolled back down over here. They stayed over there again. We had this nice little rally. But if I were to go, let's see, back to more of a longer term intermediate pullback, and here let's go 10 weeks. We'll go maximum here. So once we got to this COVID, you can see that's where staples and utilities and real estate stayed on that side for a little bit longer period of time. Again, from a longer term perspective. And so I think we got still one last rotation, one last gasp for these small weighted sectors to have some outperformance. One last bout of outperformance here, where we kind of hover below, right, just barely below the 30-day moving average before we bounce back up as everything declines. Just the Qs will decline less than IWM, and then these areas will, these safety areas will rally higher, and I would expect you'll see the trend start to roll up too, with some strong numbers that will bring that 20-day average up above 120, 125 area, which again is more typical of pullbacks than it is of bullish rallies like we had saw last month when we got up to those levels during a rally, right? All right, so if we want to add some bearish deltas to our portfolio now, we do need to be a little bit picky because we haven't really started the breakdown, but we want to look at areas where have already been weak, like Beyond Meat. You can see as we have been kind of flat and down. We have been trading up and down for the past year, but it looks like we're breaking down. As you see, we're breaking down below, with dark pink shading and a red line. We're breaking potentially below that value area away from the volume node that we've had for this past year. If you look at it from a Bollinger Band and Keltner channel standpoint, you can see the Bollinger Bands have been inside the Keltners, which have really kind of gone sideways. And now we're breaking outside of both the Bollinger Band and the Keltner channel at the same time, with the opportunity for a breakout pattern to occur. And you see that too in the directional movement index getting above 30, yesterday at least, getting above 30, and then somewhat close to 30 here today, still influenced by yesterday's rally off the low, and then below 20 on the positive index. The ADX is starting to rise. Obviously would be rising with a bearish trade showing up there. The RSI and the CCI, you can see what they look like, getting below 40 in the RSI, below negative 200 on the CCI. If you look at the three green arrow charts, but with the two line versions of those charts, you can see we had some convergence, we had divergence there, we had some convergence, and now it looks like we're getting divergence with the MACD rolling down, still negative, stochastics breaking down, moving average of the stochastics breaking below 40, below the 8-day moving average with both lines below the 30. I mean, this is a bearish setup. So in this particular case, with earnings coming up here really soon, we decided to do a bear call spread, selling the 130, buying the 135. That's where the break even ends up being. Doing a full position size because this is where the break even ends up on the stock. It's up above that gap down and that point of control over the last 4 weeks. So if earnings does fill in that gap, that's okay as long as it doesn't go any higher than that. Obviously, volatility dropping will help because keep in mind that we do have a very negative volatility here. Not very negative, but it's a pretty negative volatility. So once volatility drops, we'll actually make money from that volatility dropping. As long as we stay below this level where there's some pretty obvious resistance in the short term, then we're fine. So that's why I was able to go with a full position size and be fairly well compensated. Obviously a lot, 50% more return than what we normally get for $1,000 of risk. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. You can open up any new threads there. Remember, anybody has access to that. You have to be a subscriber, but you can be a free subscriber and have access to that particular forum. Open up a thread with any questions or comments you have. Reply to anybody else's thread. And let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon on YouTube, as well as like us on Twitter and Facebook too. Comment on our videos. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.